Good morning, good afternoon, wherever you are. My Space Secrets here with an update. It is Tuesday, the 18th of August, 2009. Now, we have come a long way on the market. We've seen some amazing things. We've seen pretty much since the bottom of the market in March, a huge rally up. A lot of people have been sort of amazed at what's happened. A lot of people can't understand what's happened. But me, myself, I'm not really that surprised. If you have seen some of my other videos, I do include some charts. So what I was going to do today for you was just include some technical analysis, what happened previously, what happened this year, and going to do a little bit of maths and a little bit of comparison. Now, you will find there's a lot of people that might comment and say, you know, what's happening back then is a little bit different to what's happening right now. While I sort of agree with that in some terms, I really have to tell you, I do have a lot of trading experience, and a lot of my trading I will spend sometimes up to an hour or 2 hours a week, and even though I am a day trader, history does repeat. Now, I'm not talking about history repeating, 30, 40 years ago. I mean, if you're trying to trade today, it's a very smart thing to do if you go back and have a look what happened last week or the last 6 months or the last year. It does help with my trading, and a lot of other astute traders out there, I know that it helps with their trading as well. So that is a little bit about the theory we'll be doing today, the background theory. But let's get straight into the charts and let's have a look what has happened. Now, if you can see the chart on the screen, what we have is the 1929 Dow Jones all the way up until 1933 and then leading into 1934 down the bottom there. Now, as I have covered on other videos, the market did crash in 1929, which you can see right here. And it was quite a significant drop, and sort of similar to the one we had back in 2008, but a fairly substantial losses were had. The market came right down. But in October 1929, when the market did reach some sort of a bottom down here, you will see that the market had a huge rally up for a matter of weeks, or actually it was a matter of months. And I have previously covered that. What I want to do today is give you some price range. Like I said, we'll do some maths on this. So back in 1929, when the market hit a low of 195, that's what the Dow was worth back then, it actually went to the high of 297. Now, the interesting thing for me there is the difference between 195 and 297 is a price difference there of 52.16%, 52%. So in actual terms, that whole rally from the lows to the highs was 52%. Pretty interesting. Now what I wanted to do is compare this to what has been happening over the last couple of months. Now you see this is the chart here of in 2008 over this side towards the left hand side of the screen, 2008. And then, the last part of 2008 was quite catastrophic. We had a lot of banks failing, we had the collapse of Bear Stearns, the market came down, kept coming down, and it eventually bottomed at what level? Right down the bottom here, level 666. Now, I guess for some people out there, that number might be scary in its own right, but from the bottom of the market, okay, down here in March 2009, all the way up, we've had a huge big rally. At the moment, the market is turning, and it's had quite a significant turn. Now, it did try to break through this level up here, but the market got to here on the S&P 1017. It was trying its hardest to break through there, trying up and up and up, but the sellers came in and the market has come down significantly from those levels. We're sitting at about, I think, 980 at the moment. But remember back to our other chart, from the bottom of the market, from the bottom of the crash to the top of the rally was 52%. That is in 1930 after the market crash. Now getting back to this year, from the bottoms again, the 666 level, okay, and we've had a top on the market here which was 1017 on the S&P 500. So let's do a bit of maths, like I said, and let's investigate 666 to 1017 and work that out as a percentage. Quite interesting when you see what happens. It basically equals around about 351 points. Okay? Now, if you work that out, 351 points plus 666 as a decimal is 53%. Very eerie, very strange, very interesting to do this maths, because we have had a pretty sharp drop in the last day overnight on the Dow. We actually went down 2.5% on the market. What I'm doing, I'm not telling you to go short because we're doing a bit of an exercise. I remember saying that this could happen a long time ago. Seeing last night brought to my attention what I said, so I thought I'd post this video and do another chart analysis just to show you the similarities of what is going on and how history is quite eerie. We could actually go up even further on the market. That is quite possible. The way the market is dropped, hit a flat top there and come down, is quite interesting, I must say. Like I said, you're going to get a lot of those people out there that keep saying, you know, we are nothing like we were back in 1929, 1930, leading into the Great Depression. But I understand that. We're simply doing some maths, and if you go back and you are an astute trader, you will realize that history repeats itself in the charts regardless. It'll do this on daily, weekly, monthly, yearly, intraday, doesn't matter. It does simply repeat. But getting back to what I was saying, a 52% rise after the market crash, and then a 53% rise after the market crash back in October 08. Very strange. Very interesting chart. Hope you enjoy it. Pass it on to your friends and family. In the meantime, thank you very much. Enjoy the video. I'll let you get back to your day, and I'll catch you all very soon.